U.S. President Donald Trump has kicked off his second term in power with a wave of regulatory changes and threats to enact tariffs on Canada and other major trading partners. So how should investors be viewing this volatile environment? Joining us now to discuss, Kevin Hebner, global market strategist with TD Cowen. Kevin, always great to see you. We're only on day 4. There's been a lot happening so far. Let's just start with tariffs, the looming threat. Why does Donald Trump love tariffs so much?
Okay, thanks, Greg. I was wondering if I could step back a little bit before talking about tariffs and think about Trump's view of the world and the mega view of the world. I'm not a mega person, but I think it's very important to understand the perspective so we understand the policy framework that's developing and changes that are going to happen. And so Trump wants a new global economic order. He's unhappy with the way things have been. And you mentioned deregulation, the relationship with tech, these sorts of things. But an important one is how the US interacts with the rest of the world. And he thinks many countries have treated the US unfairly, unfairly in terms of their trading practices, unfairly in terms of they get great access to the US consumer, but they don't pay anything for it, unfair in terms of how they treat the very open border the US has, whether it's undocumented immigrants or fentanyl, things like this. So he wants a change. And tariffs are one instrument, a type of industrial policy to implement this change. And there's 4 reasons in particular why he loves tariffs. Economists typically hate tariffs. I'm a card-carrying economist, but I totally understand Trump's perspective. And his first reason for loving tariffs, and he says tariffs, it is his favorite word, it's a beautiful word, is that he can do it very quickly by himself. He doesn't need Congress. And in the 70s, Congress delegated authority to the president for different rules on trade, including tariffs. So that's a pretty great reason. He doesn't have to worry about the courts, doesn't have to worry about the House, slim majority, similar in the Senate. So he can do things on his own and he can do things quickly. So that's a big factor. The second reason he likes tariffs is it can be a big source of revenues. During the first phase of the trade war, 2018, 2019, he got about an extra $60 billion from tariff revenues. The current effective tariff overall is only 1.5%, so it's really small. Historically, it's been normally 30 to 50%, so it is still really small. And also, I think it's important to understand historically that most of the federal government's revenues have come from tariffs. And that was really the case for the first 150 years, say, until World War I. Typically, 70 to 90% of the government's revenues, federal government's revenues, came from tariffs. So historically, that's been the case. And if Trump can get all this money from tariffs, it really helps him with his negotiations with Congress for this big, beautiful bill that he wants to pass mid-year. In particular, as you were saying in the opening comments, reducing the corporate tax rate from 21% to 15% for companies, both US and overseas, that produce domestically in the United States. Another reason that he likes tariffs is it's a great negotiating tool. So he can make threats, as he's doing in Davos today, and as he's done with both the United States, Mexico, German automakers. And he can make different threats. We're going to raise tariffs to 25% or 60% in the case of China. And it does get people's attention, in particular for some of the ways that he doesn't think, say, US and Canada are being fair, undocumented immigration, trafficking fentanyl across the border, these sorts of things, as well as unfair trade. In Canada, there's been issues for a long time about dairy, lumber, and energy. So it gives them a lot of ability to bargain. And in some sense, I think anchor expectations for the USMCA negotiations, which were supposed to start mid next year, but effectively have started already. And then the fourth big reason for liking tariffs is home shoring jobs, home shoring investment. And that is already working. We think about 2 million jobs have been brought home over the last 15 years, mainly to the manufacturing sector. And also in terms of manufacturing capacity, as you can see in this chart, it's ticking up after having had a downtrend for a long time. And we've also seen enormous investments, particularly over the last 2 years, with this big piece of industrial policy, the CHIPS and Science Act. Most of the investing is in the semiconductor sector, but it's been an enormous amount of money, very successful. So these are the four reasons that Trump likes tariffs. And ultimately, from Trump's perspective, what's important to him? He wants the stock market up, he wants the unemployment rate down, and he wants lots of manufacturing jobs. These things are really important. So to understand his policy framework and where he's going to be going forward, I think it's very important to understand how he wants to reinvent the global economic order and sort of the key metrics that are important to him.
As he embarks, Kevin, on trying to reinvent that global economic order, obviously in the past 2 decades, the emergence of China has upset the apple cart,
Yes.
probably in the eyes of the Americans.
Yeah.
So if we talk about the countries most likely to hit by tariffs, China, you've mentioned a couple times. He's talking about China in
Yeah.
Davos right now to that crowd, or to the crowd in Davos, that he wants
Yeah.
fairness. Are
Yeah.
they at top of the list?
Yeah, and sort of again, I'll step back a little bit if you don't mind. But China also wants to reinvent the global economic order. So they're very unhappy with the post-2 world order that was dominated by the United States and the West and had a lot of their institutions in place. China doesn't like it, and now they have this enormous economic heft, and they want to make sure that the global institutions, the World Bank, the UN, WHO, and so forth, sort of reflect their sensibilities, their preferences, and inputs as well. So you have China wanting to reinvent the global economic order, the US wanting to invent the global economic order, and they and their allies have very different ideas of what that means. Now, what China has been doing over the last 25 years, since they were admitted into the WTO, the World Trading Organization, is they've had this enormously positive acceleration to their exports. Their trade surplus, the current run rate, is over $1 trillion. That is just an enormous amount of money. There's never been anything in history remotely like that. So we've had sort of a view in which we want free trade, fair trade. And China said, no, that's not really what we're interested in. We want to have very much an export-driven economy, a lot of investment. We want to dominate the key industries of the future. So EVs, batteries, solar panels, drones, and so forth. And there's not going to be anything fair about this. And it's not just the US that's upset about this. Japan, the EU, most developed countries are not happy with this. But it's really been China's extremely aggressive mercantilist policies that have led us into this world, a mega world, where Trump is very much saying other people haven't been treating us fairly. And mainly that means China, in that we have to have a very different set of policies, tariffs, industrial policies, and so forth to meet this. So I think a lot of this is a reaction to China. And it's different if you look at the views of Americans as reflected in polls, how they view the Chinese government and trade now versus, say, 20 years ago. Currently, the vast majority of Americans have a negative view of the Chinese government. 25 years ago, it was very positive. Now, the vast majority of Americans, especially Republicans, have a very negative view of international trade. They think America is a net loser. And that's very different from the view 20, 25 years ago. Historically, the Republican Party has been very pro-trade, but that has changed. And we now have roughly 80% of Republicans thinking the current trade order on net hurts Americans.
All right, so Americans are feeling this way. Obviously, you have two economic superpowers, you say, trying to redraw the world global economic order. As we start to see perhaps these threats play out, people worry about the impact on growth and on inflation. What are you seeing there?
Yeah, so if you do this, there will be an impact on inflation. But at least for the United States, it's going to be very marginal. So imports in the US are about 10% of consumption. The current effective tariff is 1.5%. So even if you doubled that, that'd be a couple of basis points added to inflation. Given the month-to-month volatility you see in these numbers, I think people won't even notice it. And if you look at the data from the first trade war, 2018, 2019, you can barely see it in the data. So it is a bit inflationary, but very marginal. And it's not clear to me we're going to notice that in the data. In terms of the impact on growth, at least US growth, the experience from the first trade war, 2018, 2019, was that it hit US growth by about 40 basis points. And I think it's useful to think of that as a baseline for sort of the least amount of damage we could expect going forward. 40 basis points, maybe it could be 80 basis points, twice that. We really don't know how aggressive Trump is going to be, particularly with China. It's also important to remember that he's threatened a lot of countries: Canada, Mexico, Germany, and China. But during the first round in 2018, 2019, he also talked a lot, but almost all the actions were against China. And I think that's probably what we're going to see going forward. So net, in terms of the US economy, marginally inflationary. I don't think we're really going to notice it. And a bit of a hit to growth. But that hit to growth is going to be more than offset by the other policies he's implementing in terms of regulations, pro-tech, tax cuts, and so forth. And that's the way the market is responding to Trump. The market keeps ratcheting up their expectations for growth this year, next year.